The latest snapshot of the U.S. economy is grim. Despite the highest jobless rate in 7 years, fewer Americans are applying for unemployment benefits. But those with jobs are earning less than they did a year ago, and the factories that some of them work in are producing less. Although the inflation rate remained virtually unchanged in September, consumer spending is at a 3-year low. Add to that the reluctance of banks to lend money, and analysts say the ingredients are in place for a prolonged recession. Mark Zandi is an economist at moodyseconomy.com.
We're going to see hundreds of thousands of people lose their jobs as businesses pare back their payrolls.
Many economists blame mortgage-related investments tied to the U.S. housing market for sparking the financial crisis. But it's difficult to say exactly how much money has been lost. As a result, British columnist Will Hutton says many banks are afraid to lend money to other banks.
And one of the problems is that the markets don't know where these losses are going to fall, and they've been terrified about where they'll show up, and that's made them very frightened to lend to each other. So there's that issue. The other issue is you have to find the money.
Despite recent measures by the U.S. and other developed nations to cut interest rates and inject liquidity into troubled banks, global financial markets remain volatile. With the world's economy so closely connected, European leaders meeting in Brussels say an overhaul of the global financial system is needed. British Prime Minister Gordon Brown agrees.
It's very important that we have an international organisation that is capable of being an early warning system for the world economy, so it can spot these problems in advance and spot what's happening in one continent before it affects other continents.
The Bush administration has proposed an emergency summit with leaders of the world's biggest economies to develop a global strategy. The White House says no date has been set. Arcega, VOA News.